Are you interested in finding out how you can potentially earn $100 a day trading cryptocurrencies? It's an enticing opportunity, but it's essential to remember that it comes with its fair share of risks. If you're ready to take your crypto trading skills to the next level and discover how you can achieve this daily goal, then stay tuned for today's video. We're here to provide you with all the informative insights you need. This is Foxfire Finance, and we're committed to spreading the great news and concepts of the FIRE movement to anyone dreaming of a better life. We aim to help you achieve your goals by providing meaningful tips and strategies that will bring you closer to your dreams of financial independence and retiring early. But first, don't forget to subscribe, burn that like button, and ring the notification bell to be updated on our latest releases to guide you on your way to FIRE. So let's begin. Segment 1. Understanding the basics. Cryptocurrencies, the digital marvels of the modern financial world, are fundamentally digital assets secured by cryptographic techniques. These digital currencies have taken the financial market by storm and offer exciting opportunities for trading and investment. If you're intrigued by the idea of delving into the world of cryptocurrency trading, let's begin by laying down some essential groundwork. Cryptocurrencies are primarily traded on online platforms referred to as cryptocurrency exchanges. These platforms serve as the marketplace where buyers and sellers come together to trade various cryptocurrencies such as Bitcoin, Ethereum, and many others. Your journey into crypto trading starts with choosing a trustworthy crypto exchange. Research different exchanges and assess their reputation, security features, and user-friendliness. Once you've made your choice, you'll typically need to complete a Know Your Customer or KYC verification process. This verification helps the exchange confirm your identity, providing an extra layer of security to the trading process. To store your acquired crypto securely, you'll need a digital wallet. Think of it as your digital vault where you can keep your digital assets safe. These wallets come in various forms such as software wallets, hardware wallets, or even mobile apps, each with its own set of advantages. Remember, these initial steps are crucial for a smooth and secure cryptocurrency trading experience. By selecting a reputable exchange, undergoing KYC verification, and securing your digital wallet, you're taking the first important steps towards participating in the exciting world of crypto trading. Segment 2. Research and Analysis. Research and analysis are fundamental aspects of successful crypto trading. Staying informed about the latest news and developments within the crypto space can make a significant difference in your trading decisions. Crypto markets are highly dynamic and can be influenced by a wide range of factors, including regulatory changes, technological advancements, market sentiment, and macroeconomic events. Therefore, it's crucial to keep a watchful eye on the crypto landscape. Monitoring news and developments allows you to anticipate potential money-moving events. For instance, regulatory announcements from governments or financial institutions can affect the price of cryptocurrencies. Positive news, such as major companies adopting crypto, can boost market confidence, while negative news might trigger sell-offs. Moreover, understanding the fundamentals of the cryptos you're interested in is vital. Research the project's goals, technology, team, and community support. A solid understanding of these fundamentals can help you make more informed investment decisions. Being informed through research and analysis can help you navigate the volatile crypto market successfully. Stay updated, read reliable news sources, and consider multiple perspectives. It's an ongoing process that can enhance your trading skills and increase your chances of making sound investment choices. Segment number 3. Risk Management. Let's delve into the critical topic of risk management in crypto trading. It's a fundamental aspect that can safeguard your investments and help you navigate the unpredictable nature of the crypto market. First and foremost, remember the golden rule. Never invest more than you can afford to lose. Crypto markets are known for their very high volatility, and prices can fluctuate dramatically in a short period. So, only invest funds that won't adversely impact your financial well-being if they were to be lost. One effective risk management strategy is the use of stop-loss orders. These are predetermined price levels at which you're willing to sell your crypto to limit potential losses. Setting stop loss orders can protect your capital by ensuring you exit a trade if the price moves against your position, preventing further losses. Diversification is another key principle. Rather than putting all your funds into a single crypto, spread your investments around multiple assets. This helps mitigate risk because if one asset underperforms, gains in others can help offset the losses. Diversification can enhance the stability of your portfolio and reduce its susceptibility to market volatility. Risk management is the guardian of your capital in crypto trading. It involves not overextending yourself financially, employing stop-loss orders, and diversifying your investments. By following these principles, you can minimize potential losses and trade with greater confidence in the ever-changing world of crypto. Segment number 4. Trading Strategies. Let's explore different crypto trading strategies to help you choose the one that aligns with your goals and risk tolerance. Day trading. This strategy involves buying and selling cryptos within the same day. Day traders aim to profit from short-term price fluctuations. It requires active monitoring, quick decision-making, and often involves multiple trades in a single day. Swing trading. Swing traders hold positions for several days or weeks, aiming to capture price swings within a broader trend. This strategy requires less time and attention compared to day trading, but still involves frequent monitoring. Long-term investing. Long-term investors buy cryptocurrencies with the intention of holding them for months or even years. They believe in the long-term potential of their chosen assets and typically don't react to short-term price fluctuations. Choosing the right strategy depends on your risk tolerance, time commitment, and market outlook. Day trading can be more intense but offers quick potential gains, while long-term investing is less stressful but requires patience. Meanwhile, swing trading strikes a balance between the two. Remember to research and practice your chosen strategy before committing significant capital, as each has its unique challenges and opportunities. Segment 5. Technical Analysis. It's time to demystify technical analysis, a valuable tool in crypto trading in a friendly and informative way. Technical analysis is like a map that traders use to navigate the treacherous waters of cryptocurrency markets. Instead of peering into crystal balls, traders rely on historical price data and patterns to predict future price movements. Key elements of technical analysis include charts, patterns, and indicators. Charts visually represent price and volume data over time. They come in various types, with candlestick and line charts being the most popular choices. Patterns are like footprints in the sand, helping traders predict where the market might be headed. For instance, a head and shoulders pattern can signal a potential trend reversal. Indicators are like the tools in a trader's toolbox. They're mathematical calculations based on price, volume, or open interest. Some commonly used indicators include moving averages, which smooth out price data to identify trends, the Relative Strength Index or RSI, which gauges overbought or oversold conditions, and Bollinger Bands, which indicate volatility. Using these tools, traders can make more informed decisions. For example, if the RSI shows a crypto asset is overbought, it might be time to consider selling, while a bullish pattern and rising moving average can suggest a buying opportunity. Now, technical analysis isn't foolproof, but it can provide valuable insights into market sentiment and potential price movements. Many traders combine it with fundamental analysis for a more comprehensive view of the crypto market. Remember, practice and education are key to mastering these tools effectively. Segment number 6. Practice with a demo account. Before diving into the world of real money trading, it's wise to own your skills and strategies with a demo account. Most crypto exchanges provide these accounts for free. Think of it as a risk-free sandbox where you can experiment and learn the ropes. Demo accounts mimic real market conditions, allowing you to trade with virtual funds. They're invaluable for gaining confidence, understanding how the market functions, and refining your trading strategies. It's a safe space to make mistakes and learn from them. Once you build a solid foundation and feel comfortable, you can transition to real trading with assurance that you're better prepared to navigate the exciting yet volatile crypto market. Segment 7. Keeping emotions in check. Emotional control is a cornerstone of successful trading, crypto or otherwise. Two primary emotions that can impact trading decisions are fear and greed. Fear often arises when a trade goes against you, leading to panic selling or prematurely closing a position. On the other hand, greed can cloud judgment, causing traders to hold onto winning positions for too long, hoping for even greater profits. To navigate these emotional pitfalls, it's crucial to develop discipline and a well thought out trading plan. Stick to your plan and set clear entry and exit points before entering a trade. Implementing stop loss and take profit orders can help automate these decisions, reducing the influence of emotions. Moreover, maintaining a rational and long-term perspective is key. Accept that losses are a part of trading and view them as valuable learning experiences. Avoid the temptation to chase quick gains or succumb to market FOMO. By mastering emotional control, you can make more rational and less impulsive decisions, increasing your chances of success in the dynamic world of trading. Stick to your trading plan, set realistic goals, and avoid FOMO and FUD, fear, uncertainty, doubt. Achieving a daily profit of $100 through crypto trading is achievable but uncertain. It demands a commitment to learning, diligent research, practice, and unwavering discipline. Keep in mind that the cryptocurrency markets are exceptionally volatile with no guaranteed outcomes. To navigate this terrain successfully, never invest more than you can comfortably afford to lose, and approach trading with a responsible mindset. Remember, there are no magic shortcuts to guaranteed success in the world of crypto trading. Stay informed, stay cautious, and trade responsibly to enhance your chances of positive outcomes. Did you find this video helpful? If this guide lit the spark for your wealth journey, then burn that like button. And don't forget to subscribe to our channel for more tips on how you can reach your financial goals. Until next time, we are Foxfire Finance and keep that fire burning.